Differences between accruals and deferrals. Accruals versus deferrals. Accruals refer to transactions that have been adding up in value and are now payable. Whereas, deferrals refer to transactions that have to be delayed to a future date when they take effect. Accruals are based on the prudence concept of accounting where expenses are considered but incomes are not. Whereas, deferrals emphasize the cash aspect of accounting where even if payment is received, recording is done when work is done. The purpose of accruals is to match revenues and expenses to the same time period they are earned or incurred, despite the fact that cash will be exchanged in the future by ensuring that a company's financial statements accurately reflect its true financial position. Whereas, the purpose of deferrals is to match expenses and revenues to the future time period when the benefits of services will be recognized. Accruals are recorded in the current period and are due beforehand. Whereas, deferrals will be recorded in the next accounting period. In accruals, items that occur before payment and receipt. Whereas, in deferral, items that occurs after payment or receipt of revenue. Accrual expenses are incurred, but have yet to be paid, such as accounts receivable. Whereas, deferred expenses that are paid, but have yet to incur expense, such as prepaid accounts. Accrual revenue is revenue that is earned, but has not yet been received, such as accounts payable. Whereas, deferred revenue is revenue that is received, but not yet incurred, such as a deposit or prepayment. There is no payment of cash in accruals. Whereas, there is an advance payment of cash in deferrals. There is an increase in revenue and decrease in expense in accruals. Whereas, there is a decrease in revenue and an increase in expense in deferrals. If a person takes a loan, then he doesn't pay interest immediately but later on. Whereas, if advanced payments are received by a firm for work not supplied, then it is recorded later when work is done. Accrual system recognizes revenue in the income statement before it's received. Whereas, deferral system aims to decrease the debit account and credit the revenue account. Accrued expenses are reported now while payments of the accrued expense are reported in later accounting period or future. Whereas, deferred expenses are paid for now but reported in a later accounting period or future. Accrued revenues are reported at the time of sale but you're waiting on payments. Whereas, deferred revenue is received now but reported in a later accounting period. Examples of accruals are credit purchases, taxes, rent in advance, and interest on loan. Whereas, examples of deferrals are deferred revenue expenditures, advertisements, and subscription-based services. In short, accruals in accounting refer to the process of adjusting financial statements to reflect economic transactions, even if cash has not been exchanged. They can enhance transparency when used appropriately, but can also be manipulated by managers for deceptive purposes. Whereas, in accounting, deferral refers to the recognition of revenue or expenses at a later time than when the cash transaction occurs. In simple terms, deferral refers to delaying the recognition of certain transactions. It's like saying, hold on, we've received this money or paid this expense, but let's not record it as revenue or expense yet. Kindly subscribe my YouTube channel Thesis Helper. Thanks for watching.